Wall Street Beats, everybody. I'm Steve Lamar. I'm joined with our macro pro Benjamin Bry and our oil and gas pro Robert Morris. And what a past 24 hours, boys. Didn't see that one coming, or did you? Everybody, I think everybody thought the taco was coming.
I got a lot of taco messages yesterday. And Robert Marson, our car partner here, says like, "Oh, it's a Taco Tuesday." People were sending around the LeBron, the famous LeBron video meme. It's Taco Tuesday.
Right.
The market was at 6,600, and then it kind of rallied to 6,650 in the close. So I think the market was kind of anticipating it. And honestly, we covered a lot of hedges at the end of March, because it just felt so wiped out. Because March, It was like every day there was no bid, and
But if the market was anticipating this, Ben, why this? I mean, up almost 3% on both the equity indexes this morning, Nasdaq and S&P. Everybody's just too much downside hedges on. Everybody's got to unwind.
Yeah,
I think the CTA flows, and you got a wicked rally.
Yeah, I think it's mechanical. I think it's I think this market was a downtrending market with the right tail skew, in the sense that we see these big candles, because 2 Mondays ago we saw a 250-point candle that faded. Then that Thursday we saw a 100-point candle that faded. Then we went down to that 63.50 or whatever the low was. Then we saw the next rally. And then, I don't know, the S&P held up pretty damn well in this thing, I have to say.
For sure.
There was certain areas that got hit. Being long Bob stocks were good. The hedges did my SOFRs didn't work. So there was some pain, but most of it wasn't in the S&P. What was the peak to trough in the S&P? Like 8-9%?
Yeah, I think we got to 63.50. Yeah.
I mean, the market always seemed to anticipate that there was going to be a resolution or an end one way or the other. And we continue to talk about oil looking out to the 27 strip, or January, December was still 70 to 75. So even then the market said, okay, U.S. and Israel have overwhelming military force, and at some point they're going to overwhelm Iran. And whether that comes with further attacks or, Trump rhetoric or some sort of peace deal, there was always the expectation that this would come to an end at some point.
Yeah, I think that's right. And I think the market's definitely traded like that into the beginning of this quarter, from the 31st on, when it was time to get the books better positioned on everybody's pages.
Yeah, and Ben and I were talking pre-show. It's, we got this 2-week ceasefire. I sort of view it as a 2-week pause, and we'll see what happens. And, Trump was under a lot of pressure to back off from annihilating Iran, or the civilization, as he said,
right,
and to try and negotiate some deal. So here we are. And if you look at the last 20 plus years, Iran's modus operandi is always the stall. And now they're in that stall mode where it's not really clear that Trump got everything he wanted in this 10 or 15-point plan. If you sort of look at it, it's a little bit of a head scratcher. But, at the same time, I think Iran is part of their strategy is to let others tighten the screws politically, or the pressure to continue to tighten on Trump. And I think it is, if they don't reach some sort of agreement or full agreement, it's going to be more difficult in 2 weeks for Trump to come back and say, okay, yeah, we're going to start firing, or we're going to blow everything up again. And with pressure elsewhere. And if you look today, there are still missiles flying, particularly Iran bombing some of their neighbors. And you could argue that some of that is, just keeping the pressure on the neighbors, the other Arab states, to pressure Trump to reach a deal, to get some sort of deal. So there's no regime change either. It's unclear who Trump is talking to, but clearly it's not a new regime. And, as of yesterday, dissidents or protesters were still being executed. And if it's the same regime or mindset, the same theology as the prior regime, their full intent ultimately is to have a nuclear weapon. That mindset is not changed if it's the same regime with the same theological or ideological bent. So I remain somewhat skeptical here and somewhat concerned in a sense that, again, this is a 2-week pause. We'll see, but this is following the track of Iran of stall, negotiate, and hope that they reach some sort of deal that behind the scenes they can continue with their objective of having a nuclear weapon. Now, Trump's pretty adamant that that's not going to be the case, that they're going to make darn sure that they get their enriched uranium out of there, that they're not able at any point to have a nuclear weapon or enriched uranium. And so we may come to a loggerhead again here in 2 weeks. We'll see what happens. But again, in my view, this is sort of a 2-week pause, and we'll see how this plays out. But it does sort of ratchet up the pressure a little bit more on Trump to reach a deal and not go, full force militarily on Iran. We'll see how.
Did you guys see their plan? I mean, I saw a 10-point plan. I've seen a 15-point plan. The thing I saw from Iran that Ben sent around, I mean, that looks worse than the old plan.
Yeah, and I don't know if that's a true plan. It's the release of all frozen Iranian assets and them continuing to have control over the Strait of Hormuz
and leaving the region. And yeah,
I mean, look,
that plan is not going to happen.
Right.
There's no. I will bet my left pinky finger that is not the agreed upon deal. Okay. Like it would be like, what was the purpose of doing this if that was the deal? Like, oh, let's bomb the hell out of them, and so as a reward they get a better deal. I mean,
right.
so I think Bob's right that basically we just had one of the greatest vol crushes of all time in the last week or so, right? And so the only other one that was similar was the 50 basis point emergency cut in September of 2007. So I kind of think that this vol crush, we get 500-point rally, and, people might start allocating. But to Bob's point, okay, now we're back in we got 2 weeks now. And so do we start grinding back a little bit of it, So it's 200, 300-point candles, grind down. Because I don't know, do you think that people will start allocating cash back now? Because there's a lot of people that are sitting in cash and they get punished because that's why guys don't want to sell. Because if imagine you go back to the last day of March, you raised a bunch of cash. Well, now you're 500 points behind the market right now or 400 and some points behind the market. And I don't know how you're catching up with that. So I think that is why people feel like they don't want to sell stocks, is because of this dynamic of grind down, rip higher. Very difficult, because if you don't stay invested, you miss this day or you miss the other big day last week. And what are you going to do?
Yep. We went from the Powell put to the Trump put.
Yeah, kind of. I mean, in a way, yeah.
Yeah.
He does not.
I mean, and the one thing, what do you get out of this? The only thing they really got was opening the Strait of Hormuz, which there are tankers now flowing through it. And that's key for Trump, because some of his support was waning for this war. And the one thing he knows is he's got to get energy prices down.
Yep.
Yeah. And in the world needed this, right? In some ways, the U.S. was relatively better. Like the countries that were the best to handle this, best equipped, I should say, were probably Russia, Brazil, and the United States. And so we were taking some pain, but relatively a lot less pain than the rest of the world. So in many ways, Iran was kind of like in a position where they were screwing Thailand, they're screwing Japan, Korea, these guys. So I don't know. Like, to me, I think this is good for the world, like independent of whatever your views are or whatever. Like, you don't want like Thailand not to have any energy. My buddy Rupert lives in Australia. They had like 10 days of diesel left. Like, there's a lot of people that weren't involved with this that are losers from it, that I think we all should be happy that like some oil's flowing independent of the war itself.
Is there still stagflationary risk to all this, given the length of time that this strait was closed, and it's going to take a while to get? There's some serious there was serious damage done to a lot of oil and gas plants and storage and the like over there. I mean, what's the lasting implication of this to to that type of infrastructure, that type of demand globally? Is there some knockoff effects?
I mean, some of the infrastructure damage is at least probably 6 months to repair, maybe longer.
Yep.
The bigger impact is on diesel and gasoline. And there are a lot of ships or oil on the ocean that are now trying to get through the Strait of Hormuz that will come back in the market. But again, that's, 45, 60 days to flow through to where it gets in the ports and gets to places where it then can be refined and turned into product that the world can use. So it's not an immediate fix. And, oil's down. It's $93 a barrel today. Again, January, December is a little bit above 70. So there's no immediate fix. Prices,
Yep.
You're not going to drive to the gas station tomorrow, Steve, and see,
not in California.
Not in California. It's not going to be back.
They keep those prices
higher
for longer, for sure. Once they get you used to those prices, they like to keep them there as long as they can.
Well, I mean, the truth is that you can say there's going to be some CPI growth without question, but my SOFRs are up 10, 11 basis points today, so I think the bond market's kind of telling you that like there's some easing going on, but I don't know. I mean, let's just rewind to February of this year. What were people talking about? They were talking about AI taking jobs, and they were talking about private credit, right? And so I don't think any of those things have gotten better from 38 days of elevated oil. Do you? No. I think the labor market, like the jobs report, which was weirdly on Good Friday where nobody was paying attention, they put a headline number out there of 178. Well, 100 of that was the net birth, net death model. And then on a seasonally adjusted basis, it was not negative 79. So those will all be revised down. So the underlying economy is still weak with two major issues. The big credit cannon that had been, putting cash into the market is abating. And then the AI stuff is, driving Oracle to fire 40,000 people. And so that stuff's still real. And I think that we just got all so consumed with this war, but like there's been some economic damage without question.
100%.
And so I think that, it's not, we took the reason why I really think that the market's up is because you took that really bad scenario off the table. So if you think about it on a probability like distribution, that scenario where the world doesn't have any energy and then the stock market goes down 25%, 30%, and that kind of gets taken off the table. So you naturally have to then adjust the prices, if that makes sense.
Yep.
And along with that, you sort of taken way down the probability or chance of an interest rate hike that sort of emerged a little over a month ago. And so the market's sort of feeling a little bit better about that.
Well, to be fair, though, the U.S. was never hiking rates. That was not a real thing. Like,
right, but it creeped in. I mean, it was sort of in the mindset.
They said that, but let's just go back to the summer of 2008 when we spiked to 147. Okay, so the forward markets, and look, and I'm a guy who took it on the chin because I own the D27 SOFRs. Lost 50, I think peak, like Sunday night the war started, it was at 97.10. I think the lowest it hit was 96.42. So what is that? That's 68 basis points? Or no, 58 basis points?
Yeah.
It's a lot, right? And then the Z6s was like 75 or something like, like it. So, but the guys who actually got hit the hardest were the UK and the EU. If you look at the front ends of those markets, it was like 100 and some, and they're rallying really sharply right now. That was probably a good trade on both sides because those guys might, like the outer districts of the world might actually had to raise rates because, remember ECB raised rates in the summer of 2008, which looks hilarious looking back. But like, I think that's right. Like that tension of using gold and the 2 year or in the front end markets of the world as piggy banks to pay for energy kind of abates. That takes financial stress off. And so that's, to me, it's more financial stress has eased than, things are great. You know what I mean? Because this was a serious situation. Like this could have been a COVID type of thing the longer this went on.
Yeah.
So do you fade this equity move? Do you fade this equity move here, Ben? Do you fade this SOFR move? Sounds like you were.
I would buy the SOFR. I would buy the SOFRs. I buy the SOFRs. Like I think the buying. I don't have a strong opinion on equities. I think that this market like showed you its hand of like, hey, you just had the greatest energy shock of the modern era, and the S&P went down 8%. I mean,
Right.
you know, like what in a very questionable economy, right? So fading the S&P just is not a great strategy in general. Like it will go down someday, but until then, like I think there's better ways to do it. I think under the hood, you saw a lot of stuff that got absolutely crushed. Like all Jeff's consumer stocks got absolutely decimated. You know,
Yep.
airlines were up 10, you know, we gave that out as a hedge because, you know, this grind down right tail. And we're like, look, if you want to own your stocks, but you need some right tail, we're like, buy calls on the Jets. You know, the Jets are up 10% today or something at last I checked.
Yep.
So yeah, I don't think I would fade the market because there's a lot of people who, if this lasts, then they reallocate. But yeah, I think that I would buy the 2-year and I would buy the short end more than I would say, hey, fade the market, basically.
Got it. How about you, Bob? Are there any trades in here today that you're?
I'm not selling anything. I
Setting
mean,
up.
this is just like I say, you know, the all these stocks open down on the day. You can anticipate what was going to be the outcome last night. So I'm definitely not selling anything. And if it's still got oil at 93, you still got the strip out at 70. So I don't think any of these stocks are expensive at $70 oil, looking out at the 27 strip. So, you know, the one names, and I mentioned this earlier, I'm sort of keeping an eye on are the natural gas names. So, because the natural gas fundamentals are still intact, even though natural gas is weak today, sort of in sympathy with oil being down. What's happened in the Middle East really hasn't had a direct impact on the fundamental supply demand wise for natural gas in North America. So, and they are weak here in the shoulder period. So, you know, if I've got something at the top of my list to buy, if I have to buy some at some point on a pullback or concern, it's probably, you know, Expand, EQT, some of the gas lever names. Keeping an eye on those. I'm not buying any of those today, but like I said, if energy continues to get hit here for whatever reason, I think what's happening with oil is sort of apart from what's happening with natural gas in North America. Even though it's weak, those are the names that I might be put on at the top of my list. I have to buy something, but I'm not. Otherwise, I'm not selling anything here. I'm not buying anything. I'm just holding tight. And you know, this is a volatile market. It's uncertain. Like I said, I view this as a 2-week pause, and we'll see what happens.
Yeah, I'm with Bob. I have done no trading hardly at all. Actually, I don't think I made one trade in April, to be honest. Like at the end of March, we had an unbelievable Q1, and then we were kind of like, it feels so wiped out. I'm longer term bearish, but when you're that like one-sided in the market, you just know that you're waiting for the ripper, right? And so then you just have this market where, you know, the hedges stop working, then they started working, and then you have a situation where I don't have any edge. I don't like the insider trader guy who always gets to 5 minutes before the announcement. Like I don't get that call, unfortunately.
No?
Not that
You're
I
not
would
on the
put
list?
that on. I'm
Come
not
on,
an
man.
insider trading guy, but I'm just saying I don't have any edge on this situation. Like we can all speculate. We can spin up our AI councils to analyze it and whatever. But I'm with Bob. Like, you know, I think that I would be more apt to buy this if there was like a believable piece. And they're like, okay, then the money can reallocate. I don't see anyone who was in cash like, oh, well, now we're 400 and some points higher. Now I want to buy the market like on a 2-week ceasefire. So, you know, I'm just looking, we're 30 points off the high on the SPOOs already. You know, so I think it will be
But a
choppy
2-week
still.
ceasefire, if we know anything about this administration, means another 2-week ceasefire and then another 2-week ceasefire until they figure out how far they can actually kick this can down the road.
I mean, that's what Iran's hoping for. That's Iran's strategy.
Of course. So, I mean, waiting for some certainty around this thing probably isn't a good strategy. Just you got to pick. I think you got you got to have your list of stocks that you want to own on dips, and just wait. Just pick your spots.
Or you just don't do anything.
Yeah.
I mean, like that's the thing, you can go in the casino and just have a bottle of water, right? You don't have to play the game.
You watch everybody else pull handles.
Yeah,
how many times have you done that?
Like you don't have like if you own some assets, look, if you own the SPY, you're feeling great. You're like barely off the all-time high. You're 100%. Like, hey, the SPY is like it's a dominant, security. But like, I don't know. I just feel like everyone's always has to do something. Sometimes you just don't do anything.
All right. It's good advice. All right, boys. Anything else before we wrap it up? I'm in New York freezing my ass off. They didn't get the memo about spring here in New York yet.
It's quite nice here in LA.
I've heard. So, all right, let's wrap it up. Thanks for joining us on Wall Street Beats, everybody. You can follow us on wallstreetbeats.com. Thank you, Bob Morris. Thank you, Benjamin Bry. We will be back here tomorrow. Have a great day. Don't get chopped up out there.
Yeah.
Doing nothing is a trade.
Guys.